Are y'all ready? Let's go. What's up, everybody? Welcome to Stock Watch Sunday. My name is Brad. It is 8:30 on a Sunday night, and you know what time it is. What is going on, guys? So happy to see you here. It is 20,000 subscribers at Own the Chaos. Guys, I can't thank you enough. Oh my gosh. The amount of support from you guys has been just absolutely incredible. I don't even know what to say. It's been a long 3 years, folks. I've been doing this for 3 years, and if you can go back and watch some of my earliest videos, they're very cringeworthy, but you can definitely see just how far I've come and how much I've actually dedicated and devoted to this channel to be able to help change your lives in some sort of way, whether it's just to provide you with that extra financial freedom you've been wanting, or, you know, make some extra beer money on the side or what have you, or just empower you to take control of your investing and really, you know, build some wealth around that. So thank you guys so much for the overwhelming support. I certainly appreciate it. And if this is the first time you're visiting this channel, I just want to welcome you here. Welcome to Own the Chaos. The stock market is crazy and chaotic, right? And so no more evident than it has been in over the last 8 to 10 weeks. And so I made it my mission to help you guys own it. So if you guys want to see more content like this, if this is the first time you're visiting, like I said, first of all, welcome, but hopefully I earn a subscribe from you as well as a thumbs up. You guys have been absolutely fantastic. And we got another good week set up this week as well. As you can see, I have a Zoom pulled up, and we'll get in that in just a second. But just want to welcome some folks here. What's up? Glad to see you here. Yeah, what's up, Savart? What's going on, Blade Runner Bob? Market is tanking. Yeah, I mean, I wouldn't say tanking, but we can talk about that as well. And we will talk about the nationwide protests. Yes, you know, I don't want to get on to it. Hey, what's up, Pope? Good to see you. Lynn Kitty, what's up? Dire Straits, good to see you. Stan, what's up, man? Good to see you as well. And Shane, what's up, Shane? Good to see you, man. Happy to have you here. What's up? Yeah, LA under curfew. I think there's a lot of people that are under curfew. And here's what I'll say about this. You know, I know that I'm a person of influence, and I don't want to get into any kind of political debate. I think it's easy to say that, at least I would hope that everyone else would say that what happened was wrong. You know, it's just it was a terrible thing that had happened. The officers that committed this crime, and I say that it is a crime in my opinion, hopefully something comes from this, and we learn from this. But what I will say is that the rioting doesn't solve anything, folks. It just doesn't. It just prolongs what has been going on over the last several decades, and it just proves the people who I don't even know how to say it. It just proves the people who have this negative outlook on any race other than themselves, right? And it really doesn't solve anything. And so I'm all for protesting. I'm all for peaceful protesting, but this thing with rioting and destroying businesses, small businesses, people who have devoted all of their lives to, no matter what color they are. I mean, I've been seeing people of all different races, businesses destroyed that they put their blood, sweat, and tears in over their entire lives, and it gets destroyed for no good reason. And so for that, I hope that you guys stand with me in agreement that it's just wrong, and that there's a right way and a wrong way to go about doing things, and in my opinion, it's wrong. So I know that I was going to be asked about that, and I wanted to tread lightly with that. And I hope that, you know, I gained your respect for that. But, you know, I had to talk about it because it is affecting the stock market. Futures are down about 100 points on the Dow Jones. And it's going to be interesting how Monday plays out. I don't know how much it's going to affect the stock market overall going into Monday. What I will say is that it may be important to just sit back and watch how the market reacts after the open tomorrow, or when you wake up, what the market looks like. And so, you know, it's a very trying time in our lives. I think there's just been a lot of frustrations that have just boiled over. And this is kind of, you know, just another one of those situations that just fueled that fire, and it just, you know, exploded. And so I would just say that, you know, it's one of those things where we just have to sit and wait and watch, unfortunately. And if you are looking to get into something, in a particular stock that you're looking at, I would just encourage you to just wait, observe how the market's working. And it may end up that you end up getting some cheaper shares. Again, I don't want it to sound insensitive, but you just have to play the hands that's given to you. If you're looking to make some money in the stock market this week, you have to just be aware of what's going on in the world around you. So it does impact how the market moves. And so that being said, we are still in a serious time where working from home or working remotely is very much going to be a thing, folks. And I've gotten a lot of pushback from this, especially with Zoom, which has been very interesting. And Zoom has earnings this week. It's Tuesday after hours. Their expected earnings is going to be about 1 penny. So 0.01 is going to be their expected earnings per share. I don't think it's going to be any surprise to people that they beat earnings. And it'll be interesting here because what I will say is with Zoom, I've gotten a lot of flack from this. People say it's overvalued, and fundamentally, I agree. Okay, fundamentally, I agree. But what do we know about the stock market? How bad is the economy right now? 40 plus million people without a job, and the stock market is moving at an incredible pace, right? Getting ready to meet those 2020 highs. Why? I put out a video a couple weeks ago about the stock market versus the economy. And the thing is with the stock market is that it's going to look at the outlook. It's going to look at what could happen in the future. And we've seen that time and time again with the stock market. It doesn't matter what the economy is doing right now. The stock market cares more about what it's going to be doing in the future or what it expects to do in the future. And so that is why Zoom is moving in the way that it is. Yes, fundamentally, it is overvalued right now. Fundamentally, it is overvalued. But what the market is seeing is this trend. Facebook, 50% of their employees are going to be working remotely within the next 5 years. And Facebook is just one, the one domino that's falling, and there's plenty of other dominoes in front of it. But I'm telling you and the reason I'm bringing this up is because most of the stocks that have earnings this week, it's going to be very, very telling to view how we are going to be working from now on. Now, obviously, I've been working from home for the last 2.5 years. And so I would say that, it doesn't really impact me all that much, but I would say that this is going to be very telling on what the future is going to be bringing here. Now, I understand, okay, if you're a blue collar worker, if you're an essential employee, first responders, those types of people, they're still going to be working. They're not going to be able to work from home, of course. But the demand here for things like cybersecurity, cloud computing, video conferencing, DocuSign's got earnings this week. We're going to be looking at that. These are all going to become extremely valuable in the future, in my opinion. And, especially when it comes to like cybersecurity and that sort of thing. And we'll talk about CrowdStrike as well. But Zoom, like I said, expected earnings per share is at 0.01. Here's my thing about it, though. I do think that they beat earnings. There may be a case that could be made here that the price here is baked in. They, after hours, closed at $182, which is an all-time high for Zoom, which I said was going to happen. I've been calling Zoom to get to $200 per share before the end of 2020. Maybe that happens this week. We will see what the reaction is after earnings. I don't know if I would hold any here or I would buy this specifically because you think they're going to beat earnings. I think it's a very, very strong risk. And so I would say that if you're not in Zoom already, I would wait till after earnings to see what the response is. And then if this runs without you, if this blasts off, so be it. It's going to be a missed opportunity for you. Sorry to say that. But if you are holding on this, if you've been holding on to this for a while, since I've been talking about it over the last several weeks, maybe even up to a month, maybe take some off of the table, especially if you haven't sold any as of right now. Because even if they beat earnings, I think a lot of people are anticipating that happening. So we'll see what the outlook here is. I don't know if the earnings matter as much as the outlook. Will Zoom retract their 2020 projections because of their uncertainty with the Rona, or will they enhance them because of the response they've gotten? I think the latter is probably going to end up happening. But again, like I said, you just never know with earnings. And so I would say hold off on buying them before the earnings call comes out. Again, Tuesday after hours. And, see how this plays out. But I am still very much a fan of Zoom. I think they're going to be great going into the future. If you're looking to invest in Zoom, again, like I said, I probably would wait for some sort of pullback and dollar cost average yourself in. But in this short period, short term, like I said, wait till after earnings come out on this one. You guys know that sometimes I will tell you that might be a good idea to get in before earnings just to see where it goes, because I do think that'll be a strong reaction. Zoom's definitely a big question mark just because of how much it actually has already moved and what the expectation is for earnings. So that's my thoughts on that. That is my thoughts on Zoom. Again, after hours on Tuesday. Speaking of after hours on Tuesday, we have CrowdStrike. This is one I talked about almost a little over a week ago when I actually started talking about this topic specifically. And since then, it's continued to go up. It is well above the pre-crash numbers. Pre-crash, this was as high as $67.77, somewhere around there, and now has gone up and closed on Friday at a 52-week high, just about at 88.04. Now this can continue to run. CrowdStrike's let's see here. CrowdStrike, their expected earnings per share, according to Zacks, is at a loss of 15 cents. I almost bet that they beat earnings this time. And if they beat earnings, this is going to go nuts. I firmly believe that. So if you aren't already holding CrowdStrike, I would say maybe take the position size that you're planning on buying with CrowdStrike and cutting that in half. Maybe getting in before earnings happen with half of that position size. And then if it goes well, then putting the other half in there to ride that wave, because I do think that it's going to happen. And again, like I said, this is I think we're just scratching the surface with the needs and the demand for people who are going to be working from home remotely. This is not going to be a trend that goes away just because people go back to work. Because here's the thing, and I'll give you a couple examples here. 97% of Goldman Sachs employees were working remotely, and maybe they still are. I haven't looked at the recent numbers, but they were at one point 97% working remotely, and they were still able to keep up with all of their trades, executing them efficiently, if not more efficiently. And I think this, like I said, this is going to be a trend. There's going to be a lot of light bulbs that go off for companies that say, hey, you know what? I could save a ton of money by not having to pay to lease buildings, and I can still manage people remotely just as well, if not more efficiently than when I was, when I was having them actually in my building. So why wouldn't I try to shift the way that we run and operate? And so if they can cut those costs and what have you, the valuation of those companies are going to go up. And we're seeing that all the way across the board. And so with CrowdStrike, your cybersecurity, like I said, it's going to become more of a need for companies like this. And so I do think that even though it is as high as it is, that it's only going to continue to go up from here. Now, it's not going to go in a straight line, right? Nothing's linear in the stock market. So we're going to have our dips. And so what I would say is that I would wait for some sort of pullback. If you're a little hesitant on getting into CrowdStrike before earnings, of course, I understand that. If they end up actually missing these earnings numbers, which is very possible, as with all earnings, you just never know, because it's always a big question mark until it's all there. But you can see that there could be a potential pullback to maybe about $80 a share. If they miss earnings, it may end up coming a little bit lower. But if that happens, in my opinion, that is a very, very good opportunity to get in on some cheap shares. So if you're not too bullish on holding a CrowdStrike before earnings in the strategy that I've kind of presented to you, then waiting till after earnings before even making a decision is certainly on the table. And if this pulls back, I would very, very much be buying this up if it were me. So again, CrowdStrike, I think they beat earnings, and we'll see what happens. But that is going to be that for that. Yeah, how many times do I want to say that? But anyways, moving on. Just checking with you guys. How's everybody doing? If you guys are getting value out of this so far, give me a thumbs up. Certainly would appreciate it. I see a couple of people got some questions, and yeah, you guys can certainly continue to ask them, folks. Like I said, if you guys want to ask them, I'll be answering those questions at the end of of the stocks that I'm going through. And the only thing that I ask is for a couple of housekeeping items. if you could just give me some context instead of just saying, putting a ticker in there, or just why you see value in this ticker. Why would you like me to take a look at it, so that we can have a little bit more of an engaging conversation about it? Because if you're just spitting out a ticker symbol, I don't really know what to do with that. So if you could just put that in there, give me some context, why you see value in it. Do you expect it to go up? Do you expect it to go down? Why or why not? So that we can kind of, so that I actually have a direction in which to go in, and how to appropriately respond in the best possible way. So next is going to be Cloudera. Cloudera has earnings Wednesday after hours. I'm just going to look here. According to Zacks, theirs is also a loss at 15 cents per share. This is one that's actually been lagging in the market a little bit when it comes to cloud computing. And if we look at some of the cloud computing companies that we've already seen, Workday and Fastly, a couple of other ones, they've crushed it, right? Absolutely annihilated. Wix is another one. Absolutely annihilated earnings, and the outlooks have been incredible. Cloudera is still trading below what it was before the crash. If we look here, Cloudera was down, was all the way up to $12.23. Right now, it closed Friday, and it's still making a nice little uptrend. Closed Friday at $10.25. I would say that this is probably going to be one that could be valuable. Carl Icahn filed a 13G probably about 9 months ago. Still has quite a bit of Cloudera. And I think that this is definitely one that could get a move on. This might be one that's actually flying under the radar for right now, especially when it comes to the cloud computing and cloud storage companies. And Cloudera has been, around for a while. Now, it's pretty nice and cheap. And obviously, it's down here for a reason. They got a lot of debt on the table still. And so they got some things to work through. And that's why it's priced down here. But I think the fact that this is still lower than in what it was before the crash tells me that this is probably still just very much under the radar, and people or investors are looking at larger companies that are more established and going to them first. And I think eventually Cloudera catches up with that. And so it'll be interesting to see how earnings play out here. If they beat earnings, I mean, that's probably going to take off. If you're looking to make an entry here, dollar cost averaging, as always, is probably the best way here, but I would look for a pullback to potentially around $9.46 before earnings on Wednesday. Maybe that happens. If it does not, potentially look for a breakup above after it closes its gap around 1075. If it breaks 1075, which I think is pretty decent resistance there, could end up continuing to run, but be mindful that there may be a negative reaction. If they meet these earnings, for example, at a loss, operating loss at 15 cents per share, that people aren't going to be very happy about that, right? So again, same situation with CrowdStrike and Zoom, what we were talking about. If it's less than desirable, I still think that there's definitely money to be made here in the long term. So if you're looking to, expand your portfolio in these remote work type stocks, then Cloudera could definitely be one for you if you see this pull back after earnings. I think it's definitely a good opportunity to grab them because, like I said, remote work isn't going away. It's only going to become more relevant, and it's only going to become more high in demand. So that is Cloudera. And again, sticking with the theme here is work or Slack Technologies. Now, this is one that I also talked about. I got a lot of pushback on this one. I wouldn't say I have, I don't really have too many haters, at least yet. I'm not that big yet. I haven't made it until I got some real haters. But I've had a lot of pushback on this one on Slack. But what I will say is that I do think this is going to be really good for remote work as well. Slack, their earnings is expected on Thursday, I believe. Thursday after hours. And then their expected earnings per share, according to Zacks, lost at 14 cents. They beat this. I wholeheartedly think that they beat this. And the reason I say this is because there's just been so much demand for it. Now, a lot of people say that this is a little bit cumbersome. Some people are saying it's harder to use. I would say that there's a little bit of the reason I don't want to offend anybody, but I think that the reason that people are saying that it's harder to use, I think is just a generational thing. I think that people that are younger are enjoying Slack, enjoying the convenience of Slack, as it takes away the need to send 1 million emails a day. What Slack is, if you guys aren't aware of, is that it's more or less a way to socially connect with people in the workplace. And it's only become more of a convenience, especially as people are working from home. And so this is why this has been moving up. As you can see, if we look at this one actually is trading above where it was before the crash. And the reason why is because demand is going through the roof. Now, this has come up to a high here around $35 a share. And people, you guys probably looking at this, there's no way I'm going to get into this. And I understand it. I get it. Trust me. But people were saying there's no way I would get into Zoom at $135 a share when I first brought it to the table. And look where it's at right now. This is what I'm saying. The industry here is going to continue to run. And I don't want people to get caught up in the fact that, oh, I'm just going to wait till this comes back down to, $20 a share, or where it comes back to has a 50% pullback. In my opinion, what are you waiting for? If you think that this is where the industry is going, like myself is, and the rest of the market, might I add, this isn't just me spouting off all kinds of craziness. This is the rest of the market seeing where things are going here. And even after people go back to work and things are going back to quote unquote normal, it's never going to be the same. So Slack is definitely a good one that I think is one to pay attention to. They do have other competitors. Of course, there's Microsoft Teams, and it's already been brought to my attention that Microsoft Teams has a contract with the Department of Defense. But again, it's still a very small part of the market. It's not that many. I think that if you're looking at tech companies and that sort of thing, that Slack does become a viable resource for people who are looking to potentially have their employees work from home and be able to connect with them just like that, very fast. It's not just, oh, I got to whip up an email for somebody. I can just send them a message real quick. So it's almost kind of, it's just a really, really good company. And I think that this actually moves much higher than where it is right now. But dollar cost averaging, this is going to be the name of the game for these types of stocks. Wait for some sort of pullback. We saw it in a significant run up. I think tomorrow, especially if futures continue to trend downward because of everything that's going on, this might lend you an opportunity to get some on the cheap. I like this support here at $30.42, somewhere around in that area. If this pulls back down to there, I would say that that's probably a good opportunity to grab some shares on the cheap if by some chance it does come back down to that level. If not, and you really want to get in, you just have to scale yourself in a little bit at a time. And, you're going to end up buying some shares that are a little bit higher than you probably wanted to. But if you wait around, if you're patient enough, you will be able to get some on the cheap, more than likely get some on the dips. But the thing of it is that at least if you're starting to buy some in and scaling yourself in that way, you're guaranteeing yourself some shares just in case by chance this continues to run up significantly. So that is the plan that I would encourage people to approach this with, as well as a lot of these other stocks that have been moving recently. And speaking of which, the last one's going to be DocuSign, ticker symbol DOCU. And let's take a look at this. So let's see here. Their Thursday after hours is when they report earnings. The expected earnings per share, according to Zacks, 21 cents per share. I think they beat it. This is another one that I would say probably I would wait for. It closed Thursday up 9%, $139 a share. I would say wait for this to come back down. Maybe $128 a share would probably be a reasonable entry if you're not in already. If you are, I would probably be okay holding through earnings if you got into this on the cheap. There's no way that I see this coming back down below $100 a share. It's not a shot that'll happen. Not a chance that'll happen. So I would say, if you can see some sort of pullback, maybe 128. It could come back to 124, but I highly doubt that. And of course, it's always going to depend on what earnings do. But I do think that they beat earnings. 21 cents per share is their expected earnings per share. I think they beat it. I think they beat it handily. I think all of these do because of the demand that we're seeing and how much they've actually been used in the last 8 to 10 weeks that people have been forced to either work at home or use these in order to communicate with family or loved ones. I mean, we've seen Zoom being used on all kinds of mainstream media platforms, Saturday Night Live being one of them, CNN, CBS, NBC, Fox, all of them. And so this is why this is going to be a really, really important week, folks, because I think it's really just going to paint the picture of where we are headed in the future of how we work and how we operate and how efficient we can be working remotely from home, and if people are receiving this well. So very interesting stuff this week. Lastly, it's a little bit of a wild card. It's not something that I usually put on Stockwatch Sundays, folks, but this is something that's priced at $2.64 as of Friday's close. What? Remark Holdings is no earnings this week on this one, but this is definitely one to watch out for. If you guys have been paying attention to what's been going on as far as the casinos opening up, they've been trying to plan how do I want to say this? A structure or a plan in place for when they do open the doors back up in Las Vegas. And so I think these casinos are looking towards Remark Holdings. If you're not familiar with what Remark does, I would say that, or I wouldn't say, but they do specialize in thermal hardware, or they can basically count how many people are in your facility using thermal imaging. But then they also have technology to be able to see or show you people's temperature. Or do you have a fever, or what's going on? So and it's rumored. Now, again, this is highly speculative. Again, it's also 264. So just go into that with that understanding that there's high risk involved here, and rumors are rumors. But if the rumor becomes true, and this is why this has been moving, this could definitely make a extremely strong move here. It's rumored that MGM, Wynn Resorts, among others, are looking into Remark to use them and as a part of the process of reopening, to be able to take people's temperature as they roll in. So then if somebody does end up having a fever, they can take the necessary precautions. And I think that's going to be a huge opportunity for Mark. And I think this is going to be one that you may want to keep an eye on. Again, it's Stockwatch Sunday, right? This is one you should be watching. This came back, had a pullback all the way to 233, closed at 264. If this ends up breaking up over 316 or maybe even just $3, probably is a really good opportunity to grab some on that momentum. But again, in my opinion, I wouldn't risk a whole ton of money here. But if you have some cash that you're willing to expose yourself to some risk to, might be a good one to take a look at. I think this probably ends up moving if the rumors are true, if it holds true. So that's it, guys. Those are the top 6 stocks that I'm watching, and now I can do the fun part. I can get to your guys' questions. How's everybody doing tonight? We doing good? Listen, I know there's a lot of crazy stuff going on, guys. A lot of crazy stuff. But I love you all. I hope you love me too. I hope you guys are doing well, staying safe, and not getting in any trouble. Because if you are, I'll come beat you. Not really. I'm just kidding. But seriously, don't get yourself in trouble. All right, let me go ahead and look at some questions here. Okay. Doesn't Twitter use Slack at their HQ? Text? I'm not sure about that. I'm not sure about that at all. I haven't done that much in-depth research to know who is actually using Slack. But I mean, if they are, I'm sure that's probably a really big deal as well. For Dire Straits, I've had calls on Gilead, Novavax, and DVax for vaccine play, SES and PK calls for momentum plays. Jeez, a whiz. That's a lot. Please give your take on these stocks if you get time. Yeah, so Dire Straits, I would say that all of those carries their own levels of risk. I mean, Gilead, we've already known that they're getting ready to carry out, or they already have carried out treatments for the Rona, if you already have it. And so that is obviously going to be a huge moneymaker for Gilead. But be careful. With all of these plays, there's a lot of speculation involved. Novavax definitely has a lot of speculation involved with it. DVax as well. All of them do. What I would say is, I don't know how much of your portfolio or how much of your account you have wrapped up into these, but in my opinion, I think that's a little bit too much. If you're looking for vaccine type plays, or if you're looking, I would select maybe at most 3 that are related to the Rona that I would be looking at, and I wouldn't be investing a large part of my account or anything like that, because you're going to be exposing yourself to a lot of risk. Diversity is everything, right? And you don't want to have a huge part of your account being taken over by these highly speculative plays, because, and I've said this before, a lot of these companies are in a race. There's 100 plus, or at least 100 biopharma companies in a race for the vaccine for the Rona, right? And I've said this before, but I will quote Ricky Bobby in saying, if you're not first, you're last. So if Moderna actually ends up coming up with a vaccine, and we'll see if that actually happens, but if Moderna or any of these other ones come up with a vaccine before the one that you're holding, it's going to be a bad day for you. But if you do, then it's going to be a great day for you. So, but it's very, very risky, right? So there's no medals or money to be made for anybody who's in second place. It's just not going to happen. That being said, shake and bake. All right. Let me get to the next one. Appreciate you guys' questions. Again, like I said, if you're getting value out of tonight's video, I certainly would appreciate a thumbs up. Thanks, guys. Appreciate you. Blade Runner, I got a short in Friday's top of AMD. Still feeling good about it. Yeah, we can take a look at AMD. By the way, folks, if you guys don't know already, the platform that I'm using to show you all these charts on is WeTrade HQ. This is a great platform for you to learn and grow and be a part of a great community of traders that just love to celebrate each other's success and help people learn how to invest and trade in the market. It's a great community. It's a community that I built with my partner Jake. And this is a platform that we have. It's great. The other great part about it is that you can come here and learn from me, myself, and other really good mentors. Obviously, it's a paid service, but what I'm doing is I'm providing a month free for anybody who has never been a part of my community or my mentorship. So what happens in my mentorship is that I go live with folks from 9 a.m. to 10 a.m. Eastern time via Zoom, conveniently enough. And I basically show what's going on in the market and how I plan to either trade or invest in that day. So it's a great community. And then I'm with you guys as well the entire day in Discord too. So if you want to be a part of that, the link's in the description. If you could put the code, the promo code Delta. It's the last day for Delta. I'll be changing the promo code for June here. But if you put the promo code Delta, you get a free 30 days. And it's not going to expire on you, so don't worry about that. But you get a free 30 days to come hang out and give me a shot. And hopefully I'll earn your business, and you can kind of hang around and be a part of the community. It's a great community to be a part of. It's not just, hey, follow all my trades. It really is a community of this is how you should manage risk, and this is the type of things you should look for. Don't buy things that are at the top, that type of thing. So it's a really good community. It's not just me that's in there that are great traders. There's people that are in there that I would say are better traders than even myself, that just help beginning traders or people who maybe have been in the market for at least a little bit and know enough to get themselves in trouble, right? I'm sure there's probably a lot of you out there who have fallen into that bucket, but if you guys want to be a part of that, certainly we'd be happy to have you. So, AMD, I'm actually a little bit surprised that Blade Runner's short on this, but maybe it does fall down here a little bit. It's been a little bit rocky for AMD. I don't know why. I would say on the daily chart, this actually is starting to look like a little bit of a cup and handle, but we'll see how this all shakes out. But I still do love AMD for a long play as an investment. They've done nothing but beat earnings over the last several quarters. And, they pulled their projections for 2020, as many companies did, but I still think that they're on the right side of this thing. And when we look at companies like NVIDIA, Intel, they've all done extremely well, and AMD just seems to continue to be lagging. But I do like AMD as an investment, but maybe Blade Runner's onto something. He's an excellent trader. He's in our mentorship as well. And lots of times he ends up being right a lot of the times too. So, all right, so next question here. John says, UCO on the move last week. Is it about to boom? Okay. So UCO, if you guys aren't aware, UCO is a ETF for an oil ETF. I would be very cautious about this, anything oil related. And I've been very vocal about this. And, it's come up since it went negative. I just don't like it. I really can't wrap my head around why anybody would be getting into oil at this point in time. I understand a little bit of the logic here, and that people going back to work or people getting back out and doing the things that they love to do means there could be more demand for oil potentially. And they have backed off of drilling a little bit. to try to supplement or try to go away from the danger of them reaching capacity. But I still think it's possible that we reach oil capacity. And if that happens and everything shuts down, it's not going to be a good day. And it's going to be a bad day overall in the market if that happens. It's going to be really bad. There's a huge part of the market that still relies on oil or the strength of oil and the health of oil to be, kind of a indicator of how well the market should be doing. And so I would just be very, very cautious. I don't think oil is going, the demand for oil was down before all this happened, and then it just went through the basement, literally. So just be careful with anything oil related. I'm not saying that's not going to go. You look at this chart here, there's nothing here that tells me that it's going to go up. Fundamentally, I don't like the way that, it's being portrayed that it could go up. And, and certain media outlets, I cannot get behind oil. You couldn't pay me to own any. You really couldn't. It's just my opinion. Like I said, you can make some money off of it. You want to make a short-term trade on it? Sure. Long-term, not something that I would invest in, period. Just couldn't do it. Hope I didn't offend anybody who likes oil or anything like that, but I can't get behind it. Just really can't. I think there's just so many other opportunities out there that can make you a lot more money than oil can, and these ETFs could get you a lot of trouble if you end up holding on to them longer than you should. So, yeah, Blade Runner's abandoned on the oil. Get into EVs. Absolutely. I would say getting into EVs, electric vehicles. Tesla's going to change the world, folks. And I firmly believe that Tesla will get to 5,000 shares or $5,000 per share at some point. I'm not saying it's going to happen tomorrow, next year, or the year after, but it will happen. And I think, Tesla's more than a car company anyway, but electric vehicles are going to be the way here. I think, what was it? The UK is going to be banning petroleum cars. Any new petroleum cars will be coming into the country by 2034. I think I read that passed into law. It's coming, folks. So, hey, what's up, Justin? Garage Day Trader, thanks for the donate $20 for 20K subs. Appreciate you, bro. Thanks for showing up tonight. Appreciate you. Thanks, man. That's really awesome. Thanks so much. Speaking of Tesla, Freightliner says, how do you think Tesla will play tomorrow? So here's the thing. A lot of people are speculating that Tesla will do well because of what SpaceX did. And in my opinion, maybe it does make a little bit of a move, but I don't know. I don't think that that's going to be the reason that it moves. I could be wrong, but you look at here, it's actually been trying to beat down this door at 831. So I think what actually gets Tesla moving is this resistance break more than anything. If it breaks that resistance and continues to move back up over 830, 835, I guess, is where it closed at here. But you can see it's a very clear resistance on Tesla. I am an owner of Tesla. I do have Tesla shares. So I just let it sit there. But I would just hold on to it. If you're not in it right now, I would work your way in my opinion. Like I said, I've just made a pretty strong bullish case for Tesla. But I would say, like I said, looking for this to break up over this resistance that it's at right now is where I would really kind of be hanging my hat on, and not so much about what SpaceX did, which, by the way, was freaking awesome. If you guys didn't watch it, please go YouTube that and watch it after the stream. Don't leave it right now. Don't leave right here. Stay with me, folks. Stay with me. All right. Let me see here. Shane. Yeah. So thanks for donate, Shane. Appreciate you. Let me move back up here. How do you think MGM does with Vegas opening? I've been bullish on MGM for the last month and a half. So 6 weeks I've been bullish on MGM since it was down around $10 a share. I said, now's the time to get it. And what did it close out on Friday? Closed $17, I want to say. I've been in MGM for a while now. And I've still remained bullish on MGM. I would say that it's going to have its ebbs and flows. Yeah, 17, 18 is where it closed on a Friday. Went as high as $19 the other day. And no reason for me to consider selling it anytime soon. So I would say it's pulled back a little bit over the last couple of days. Might be a good opportunity to get in on the cheap. It's holding up above $17 relatively well. If it doesn't hold above $17, probably ends up coming back down to around 16. If I'm looking at the chart here, maybe around 1636, 1635 could be the next area of support. But I would say if you're looking to invest in MGM for a longer term, let's say 6 months to a year, just work yourself in. There's no reason why I would say to not, no good reason why I would say don't hold on to MGM. And the same thing goes for Wynn or any of the other ones. But I do like MGM the best. They have the best balance sheet. They have a lot of cash on hand. They could hold out and be just fine if they don't open up for another year or more. They have that much cash on hand. So I think MGM, like I said, has the best possible outcome for success, whereas maybe some of the other ones don't have that kind of setup to last as long as MGM can, if the worst happens and they don't open up for a while. So that is my opinion on that. Next question here. Do you think VTIQ will be like Tesla? Not a chance in hell. Krizik, I think that's how you pronounce it. Krizik71. Do you think VTIQ will be like Tesla? So, Nicola, no. VTIQ, if you guys haven't heard, is going to be the company merging with Nikola, which is another EV hydrogen-powered company. They have semi-trucks that are hydrogen-powered, which is pretty irrelevant if you ask me. I know that they're trying to get that ball rolling. It's just not going to happen. Batteries are the way to go, and Tesla is 5 to 7 years ahead as far as technology is concerned out of anybody in the automotive industry. Anybody, period. And so Nikola's got a long way to go. I mean, they already have to compete in a very, very tough American market. I don't think people realize just how insane it was, or how seemingly impossible it was for Tesla to break into the American automotive market and crush it. The odds of that happening were not in Tesla's favor at all. And so for something like VTIQ, maybe it runs into this merger, which I think is supposed to happen, next week or the week after? It's supposed to happen in June. This merger is supposed to happen. It's supposed to be a thing. And maybe it has a little bit of move there. This is not something that I would invest in long term. And I could be completely off base here. I would just say, if I had my choice, let me invest in something like VTIQ or Tesla. It's Tesla all day. It just is. The vehicle technology they have is far superior to any other automotive company out there by 5 to 7 years. And then you have VTIQ, right? So I would just, I know that's what's hot right now. It's what everybody's talking about. And like I said, you probably could make a buck or two on this as it runs into the merger or the settlement date for the merger. I just don't see it. I just don't see it for the long term. So I don't know what your outlook was on that, but I think I made a pretty good case for both short term and long term. But you know, I just don't see VTIQ moving well longer term. Not something that I would put in my portfolio for long. What's up, guys? See a lot of people, a couple more people rolling in here. How many do we have? How many do we have here? How many's in the you guys crack me up. You always give me a hard time. It's all good. Keeps me grounded. I'm good with that. 189. Thanks, DJ. Let's get the likes up there, folks. Appreciate you. Got 189 in the stream. That's awesome. Sweet. What's our next question here? BZUM, will this run as other Chinese stocks like BABA or JD? Here's the thing. With these Chinese stocks, it's tough. I'm going to pull up BABA here. We're going to look at this. Again, over here at WeTrade HQ. And I'll it's tough, man. With these Chinese stocks, I got a feeling that they're going to come back. They're going to come back pretty strong. So if I'm looking at this, I'm looking at BABA right now. It's still undervalued. It went up to 207 from coming back down to under 200. It's undervalued. And the thing of it is, with all these other Chinese stocks that could potentially be quote unquote delisted because of what's going on politically, it's going to be years before that even passes, if it even passes, and I don't think it will. I think, like I said before, it's a bunch of posturing. So to answer your question, BZUN, take a look at the chart. I'll be honest with you up front here. First and foremost, I'm not familiar with BZUN, so I can't give you too much as far as a background on this. Are they a good company or aren't they a good company? I'll just look at the chart here and tell you what I see. Lots of times I have a pretty good idea of the companies that get brought up, but this one I'm not so familiar with. I'm looking at this one and seeing that it's holding relatively well up above 25.32. So if you're looking for a potential support, that's probably it there. We can go ahead and mark this 25.32 right here. So I would say, be on the lookout for a potential move up from that support. If this starts to actually get bought up, you start to see the momentum rolling up from this support, might make it possibly a good entry there. And then there's another resistance here right around $30.53. My opinion, I think that's probably another area that it has to get through before it continues to move from this bounce that could potentially happen from that 25.30. So that's what I'm looking at on the chart there. Hope that helps at least a little. And okay. 207. There we go. There we go. Appreciate you, DJ. Mike says, any insight on GAN? Oh, yeah, GAN. So May 20 IPO Casino Simulated Money Management. So yes, GAN is going to be one that could potentially continue to run. I traded this a little bit last week, made some decent money on it, and this might end up continuing to run. I talked about this, what was it, earlier last week? Any of my mentorship peeps help me out here. I was talking about this one. And look, this is just recently IPO'd on May the 5th, I want to say. May 5th or May 6th, somewhere around there. Yeah, May 5th. I was right. And this continues to run. Most of the folks that were in my mentorship have either bought this on a nice hold and are continuing to hold this. I think this is definitely one that continues to go here. It's a little bit dicey right now, though. It's gone practically straight up over the last couple of days. I would say it's probably got room for a pullback. $20 is going to be the new support for it. $20 was a pretty tough resistance, and now that it's gone up over that, I would say that it's going to be a pretty decent support. I would look for a pullback here. I mean, you can see Friday's buying was insane. Last, 2/3 of the day was just nothing but buying going on GAN. So if you guys aren't familiar, it's a money management system for a lot of the casinos, and FanDuel is probably one of the largest clients. So there's probably going to be a lot of demand here, especially as sports start to open back up. GAN could probably make a really nice move. But I probably would not get in all the way up here at $22 a share. I would wait for some sort of pullback. I like $20 for support. Hope that helps. And yeah, so I do like that. All righty. Take a couple more here. Thoughts on Zoom? Already talked about that. Go back and check it out. John Whitworth, SHLO, almost at 52-week low. Here's the thing about looking at things that are at 52-week lows. There's always new 52-week lows that could be made. Nevertheless, we'll take a look at SHLO. Shiloh Industries. What does Shiloh Industries do? Let's see if we can get it pulled up here. It's taking its good old time. Maybe it'll pull up. Let me pull up on Thinkorswim. SHLO. There we go. I don't know why it was lagging there a little bit. I'm going to zoom it back out here. Sorry, you guys probably won't be able to see this very well because Thinkorswim, you can't see a whole lot when the screen is this tiny, but I'm just going to look at it here. It's got some nice momentum over the last few days. The low was at 75 cents. It's sitting at $1.19. I don't know anything. I wouldn't hang my hat on this. If you're looking for a move, maybe a resistance break up over $1.34. If it can't do that, I wouldn't be in it. I mean, if you're looking at this trend, there's nothing about this that tells me that screams buy. If I'm honest, and even before the crash, you're looking at $3.48. It's going to take a long time for it to get back up there. For the kind of company that this is. So I would just be cautious with something like that. I understand the allure in getting into a penny stock. Here you go. It finally pulled up. I understand the allure of getting into a penny stock. But we'll see. We'll see where it moves. I don't know. I'm not a big fan of that chart. I don't like the way it looks. Liquidity looks like it's also an issue. So just be careful and cautious about that. Alrighty. Again, guys, if you could give me a like, you're getting value out of tonight's video. I would also add too, if you're not part of the Chaos Crew channel membership for $4.99 a month, you can get a watch list from me every single day. If the mentorship's not for you, no big deal. The cheaper option is just to get a watch list from me every single day before the market opens. It's usually about an hour. I put it in the community tab, so you can be scrolling through YouTube and you can see that watch list there every day before the market opens. I put a watch list of potential stocks that I think could have moves or moves of volatility. I'll give you my thoughts on each one of them. It's a pretty decent write-up. It's pretty good priced, if I do say so myself, for the value. And so if you guys want to check that out, again, the join button, if you want to click on that join button next to subscribe, should be able to see that. And love to have you a part of the Chaos Crew. We've got quite a few folks in there now. It's been pretty awesome. Okay, next question. Air for the Apocalypse. What do you think about LK will be delisted? I do think LK will be delisted. I don't think LK. So if you guys don't know what happened with LK, Luke and Coffee, the company cooked the books essentially. SEC wants them delisted. They appealed it. There's 45 days, if I'm not mistaken, for the appeal. Could be up to 45 days. If the appeal gets denied, which I'm pretty sure it will get delisted. And I'm very, very confident that it's going to be. It's going to come on back down to the OTC, folks. And I would not be in LK. I played it for a nice little flip when it sold off from the initial announcement that it was going to get delisted, because there's always some sort of move back up or a short squeeze. So I made that move, and that was nice. But I wouldn't be hanging in that. Nope, not a chance. Interested to hear your take on Live Nation, their parent company to Ticketmaster. I think they're trading way too high right now, and I'm thinking of shorting it. LYV. Here's the thing about stuff like this. So I understand your thought process, and I appreciate that 100%. And I don't think that there's anything wrong with the way that you're thinking, especially with shorting it. First of all, on the daily chart, this is choppy as hell. I don't even know what to tell you as far as the entry is concerned. Potentially, if you're looking to get into this, I don't know, man. Maybe $48 a share could be where it broke out, but there's gap ups all over, gap ups and gap downs everywhere. So for this one, I understand the thought process behind potentially shorting this, and I would agree that it is a little bit high, given where the low was. But I don't know. I would be very, very cautious, because you don't know what the market's going to do when things start to open and back up, and venues start to, shows start to happen again. I understand the thought behind it. I would say that you could potentially short this. Just be careful, because you just don't know what the market's going to do right now, especially with any kind of positive news that comes out about the Rona, anything that happens as far as venues opening back up, that sort of thing. You're going to get burned big time. So just be careful. I think you can make a short. You can make a case for shorting it. Absolutely. I wouldn't short it unless it broke down below that $48 mark. Technically, okay? From a technical standpoint, I wouldn't short it until it breaks below that. Okay. Let's see here. Do I think Hertz is going to get delisted? Yeah, probably. Unless somebody really comes in and saves their ass. But honestly, Hertz, I mean, Hertz wasn't doing well. I saw a lot of questions about Hertz. So I'll get to the question here in a second, Alexander. But I see a lot of questions about Hertz. So I'm just going to answer this so that everybody can kind of get my thoughts on this. Here's the thing. Hertz was not doing well before all this happened. And kind of like JCPenney, right? They were already hanging by a thread, and then this just exacerbated their problems, and basically exposed a lot of the issues that they had that kind of everybody knew they had, but it just made the matters worse. I don't know who would want to invest in a rental car company, before all this happened, right? The demand doesn't make a whole lot of sense. But I mean, because you have what? You have ride sharing, apps that are out there, ride sharing companies that are moving rental car companies out. And of course, there's going to be some kind of demand for rental car companies, but never like it was before. And I don't think it actually increases anytime soon. So if I was an investor, like if I was somebody that was looking to put a bunch of my cash into a company, it would not be anything related to a rental cars. And with Hertz being, as down as they are, already in bankruptcy, well, Chapter 11, I don't think that there's any case that you can make for buying into something like that and being confident in any way, shape, or form. It's just not good. It's just not. There'll be a Q stock before long. So, anyways, let's get to Alex's question here on what we got. Alex, whoop, I passed him. There he is. What's your take on TRXC? Will they rise based on no hands-on surgery? Ooh. I don't know. I don't know anything about TRXC, but let's take a look. TRXC. No hands-on surgery. I guess that's probably not. That's not relatively new. That's not new technology. I would say. Let's see here. I would say stay away from this. I would say stay away from this, Alex. I mean, this is an awful chart. It's bad. It's really, really bad. And it hasn't moved a muscle since the crash. I'd imagine they probably got mounds of debt. No, I would stay away from this. I don't even really I don't really have much else to say about that. Zoom one day trade tomorrow, perhaps. Look, here's the thing about Zoom. I love Zoom. I will remain bullish on Zoom until the market says otherwise. I've been singing Zoom's praises since $100 a share, and I said $200 then, and I still stand by that. Trade that however you want. Let's see here. XSPA is looking good. First to provide COVID-19 checks in airports and just got JFK contracts. Any thought? XSPA, didn't it already make its move though? Cirillo? I try to get people's names right. I hope that was right. Let's see here. Looking at the daily charts, 83 cents. You guys are loving the penny stocks. Yeah, I mean, I saw this one move. It's already gapped up. I would say the move's already been made. And XSPA has a ton of debt, folks. And there's a thing you got to understand. If you're not aware of what convertible debt is, get yourself comfortable with that term. And go look at a balance sheet. And just Control F, convertible debt. Or, convertible debt. And see if you can find that on any stock. You can go XSPA, pull up their balance sheet, and I'll show you right here. You can do it right on WeTrade HQ. Go to the filings on WeTrade HQ. Go to their latest 10K or annual report, and look up their right here 10K. You can look it up, pull up their balance sheet, Control F, derivatives or convertible debt, and see how much they got. It's probably a lot. I'll just say that. And what that means is that is dollars that is going to be converted into shares. So the higher the dollar amount of that convertible debt means that there's going to be more shares that are dumped into this stock, and which means that the position that you hold is going to be a lot less valuable later on down the road, which is why I hate Aurora Cannabis, and I can't understand why people just don't get it, because they probably don't understand what convertible debt is. So, just be careful. I'm not saying that XSPA can't continue to move, and it may, but at some point or another, they're going to have some kind of offering, or they're going to do some big old share dump that a lot of people aren't going to be liking. There's going to be a lot of people had left with a bag or a huge loss. So just be careful with this, man. I'm sure that it can move. I understand the optimism here, but I like a lot of these stocks that are priced down this low. A lot of them just can't get over that proverbial debt hump. So I don't mean to be all doom and gloom, but that's more than likely the outcome for this one. So that's going to do it for me, folks. I appreciate you all tuning in tonight. Again, if you could give me a thumbs up if you got value out of this video. And thank you so much for all the 20,000 of you that believe in what it is that we try to do here over at Own the Chaos and are just, so supportive of this channel and what, the mission that we're trying to accomplish, which is owning the chaos of the stock market. So thank you guys so much for tuning in tonight. As always, folks, I will see you all before the bell, and B. Smith is out. Have a good one, guys. See ya before the